There's a pattern in history that has built empires and destroyed them. A rhythm so precise, so cruelly consistent, that even the mightiest powers from Rome to Wall Street fall in time to its beat. It begins with euphoria, with charts that only go up, with experts declaring that this time is different. Then silence. The air changes. Confidence turns to confusion, then to fear, and what once felt like prosperity becomes the fuel for collapse. In 1929, the Jazz Age ended, not with music, but with the sound of closing banks and crashing dreams. The same traders who toasted record profits were suddenly selling everything they owned for pennies. In 2000, the digital revolution promised a new era of infinite wealth. But when the dot-com bubble burst, those promises evaporated, leaving behind abandoned offices and broken portfolios. In 2008, the American dream itself cracked. Homes, jobs, and savings disappeared in weeks. Yet out of that chaos rose the longest bull market in history. Because here's the truth. History hides behind tragedy. Crashes don't destroy wealth. They transfer it. From the unprepared to the prepared. From panic to patience. From illusion to reality. Every great reset begins as a crisis and ends as an opportunity for those who understand the cycle. And now the cycle is back. Consumer debt is at record highs. Governments are borrowing as if tomorrow will never come. Markets are priced for perfection in a world cracking under imperfection. The warning lights are blinking red just as they did before every great turning. Yet the world dances on confident, comfortable blind. But deep beneath the surface, the numbers are whispering the same story they always tell before collapse. And if history keeps its rhythm, 2026 will not be a correction, it will be a reckoning. Not the end of the world, but the end of an era. And those who see it coming will not just survive, they will inherit the future. Every civilization, every market, every empire that has ever existed was built on the same illusion that prosperity can last forever, that debt is just another number, that the rules of history have somehow expired. But beneath the noise of progress, history hums the same quiet melody, a cycle of rise, excess, and collapse. We like to think we are different. We build algorithms instead of armies, print code instead of coins, and call it innovation. But in truth, it's the same story told with newer tools, the same human nature wearing a modern mask. The anatomy of a cycle. Every financial age begins with hope. It starts in small rooms, a banker's promise, an inventor's vision, a politician's speech about endless growth. People believe, money flows, confidence builds. And as the world begins to shine brighter, no one notices that the foundations are beginning to crack. The second stage is excess. Cheap credit becomes the oxygen of civilization. Investors stop asking, is it worth it, and start asking, how high can it go? Debt becomes not a burden but a drug, euphoric, addictive, and fatal in large doses. Home stocks and currencies rise in perfect synchronization, forming the illusion of prosperity. Then comes denial. The moment when warning signs flash red, but the world refuses to see them. Every indicator screams overvaluation, but economists insist it's a new paradigm. Governments promise soft landings. Analysts speak of strong fundamentals. But beneath the optimism, the math begins to rot. Because the system runs not on production, but on promises that can't be kept. And finally, reality returns. It arrives quietly then, all at once. Interest rates rise, credit tightens. The liquidity that built the illusion drains away. Markets fall faster than anyone believes possible. Confidence collapses faster than the economy itself. And when the dust settles, the same people who once cheered permanent prosperity demand someone to blame. That's when the transfer begins. Not of money, but of power. The hidden mechanism. Every crash follows the same invisible physics. Wealth doesn't disappear. It changes hands. It flows from the over-leveraged to the liquid, from the emotional to the rational, from those who react to those who prepare. The poor lose capital. The middle class loses security. The wealthy lose patience and then make history. It happened in 1929 when the American dream shattered overnight. And while crowds lined up outside banks, a handful of investors bought blue-chip stocks for pennies on the dollar. It happened again in 1973 when inflation crushed wages and destroyed savings, yet those who owned hard assets multiplied their wealth tenfold. It happened in 2008 when panic ruled the airwaves, and men like Buffett, Dalio, and Icahn quietly purchased the bones of broken companies that would later define the next decade. Because in every crisis, value doesn't die, it's merely reassigned. And the cruel symmetry of history is this: the more violent the crash, the greater the opportunity for those who remain calm. The mathematical trap. Every empire has its version of this trap. Rome debased its coins until silver was worth less than the metal it was stamped on. The French monarchy drowned itself in war debt before the Revolution. The British Empire borrowed its future to sustain its colonies. And today the modern world prints money on screens instead of minting it in metal. But the equation hasn't changed. Debt grows faster than production. Consumption outpaces creation. Confidence exceeds reality. And the result is always the same collapse, not because of some external enemy, but because mathematics eventually calls in the debt. You can ignore politics, you can manipulate numbers, but you cannot negotiate with arithmetic. For decades, the global economy has floated on an ocean of artificial liquidity, interest rates near zero, credit made infinite, and risk hidden behind digital curtains. Governments borrowed as if tomorrow would never arrive. Corporations gorged on cheap money, buying back their own stock to inflate illusions of strength. Consumers mortgaged their future for comfort today. And like every generation before them, they called it stability. But beneath the calm surface, the cracks are widening. When interest rates rise, as they always must, the tide goes out and we discover who was swimming without capital. And that's when the reset begins. The human element. This cycle isn't mechanical, it's psychological. It's powered by greed, denial, and fear. And every human being is caught inside it. In good times, we forget what risk feels like. We convince ourselves we deserve the profits. We mistake leverage for genius. And when the crash comes, we look for villains, not mirrors. Fear takes over. The same people who once begged to buy at any price will sell at every loss. The same economists who promised resilience will predict collapse. And the same cycle that built their fortunes will destroy them because they were never investors. They were believers. But belief is fragile. Discipline is not. That's why the wealthy think in cycles, not seasons. They understand that wealth is not created in the boom, it is positioned for in the boom and harvested in the bust. They see markets not as casinos, but as clocks ticking toward inevitability. The uncomfortable truth, the next great crash, won't be a random accident. It's already coded into the system, an algorithm of debt psychology and time. We've been here before countless times, and every data point, every ratio, every whisper from history points toward the same outcome. The reset will come, not because someone decides it, but because the numbers demand it. And when it does, the world will divide once again into two kinds of people, those who panic and those who prepare. Most will call it destruction. A few will recognize it for what it truly is, a transfer of power disguised as chaos. Because the purpose of every collapse is not to end the game, but to restart it with new players in control. History proves it again and again. Every cycle begins the same way, quietly, innocently, almost beautifully. A whisper of optimism after a period of pain, a nation rebuilding, markets recovering, people daring to dream again. In this fragile dawn, money feels like magic. Governments lower rates. Investors rediscover courage, and the public begins to believe that the worst is over. But behind every recovery hides the seed of the next disaster. In the early 1920s, it was easy credit and new machines that promised infinite productivity. In the 1980s, it was deregulation and leverage, a revolution of finance. In the 2010s, it was technology and cheap capital, an illusion that progress had defeated gravity. The boom always begins with innovation, something that feels genuinely new. And for a while it is. The telegraph, the railroad, the internet, artificial intelligence. Each invention reshapes the world, attracting money like iron to a magnet. But then something changes. Greed replaces vision. Capital stops funding ideas and starts chasing returns. The market ceases to measure value. It measures momentum. And like a flame given too much oxygen, the system burns hotter, faster until it consumes itself. By the time people realize the fire has started, it's already out of control. But the pattern had already begun. Section 2, the euphoria and the erosion. At the peak of every boom, logic disappears. Economists call it irrational exuberance. Psychologists call it mass delusion. History calls it the moment before the fall. In this phase, the numbers no longer matter. Debt once feared becomes fashionable. Risk once respected becomes entertainment. And optimism becomes the new religion of nations. In the late 1920s, American brokers offered 90% margin loans buying $10 of stock with $1 of cash. In Japan's 1980s, bubble people traded real estate like lottery tickets convinced land would never lose value. In 2006, homeowners borrowed against homes they couldn't afford to buy second homes they didn't need. And in the 2020s, the digital age turned speculation into spectacle meme stocks, cryptomanias and AI euphoria fueled by the same timeless emotion greed disguised as genius. The pattern is mathematical, but the experience is emotional. People stop asking questions. They chase returns. They borrow tomorrow's prosperity to feel rich today. And every empire plays its part. Governments print. Corporations leverage. Citizens consume. Each justifies the excess by calling it progress. But progress without restraint is simply decay in slow motion. The system swells with credit liquidity and arrogance. Everyone feels smart until the tide goes out. Then the same people who believed in a new era discover the oldest rule in finance. What rises fastest falls hardest. Picture this. The screens turn red, the phones stop ringing, and silence spreads across trading floors. Confidence evaporates faster than the money it created. By the time they realized, it was too late. Section 3. The cleansing and the transfer collapse doesn't announce itself. It doesn't knock. It simply arrives swift, surgical, and merciless. Interest rates rise, credit tightens, liquidity disappears. The gears of prosperity grind to a halt. Panic becomes policy. The same governments that once promised stability now scramble to contain the chaos they created. Central banks / rates print trillions, invent new acronyms for old desperation. But you can't solve a debt crisis by adding more debt. You can only change who owns it. This is the great transfer, the hidden law beneath every crash. Wealth moves quietly but decisively from the many to the few, from the leveraged to the liquid, from those who borrowed to those who waited. During the Great Depression, Rockefeller famously said, "Fortunes are made when blood is running in the streets." In 2008, those who held cash walked into the rubble of Wall Street and bought the future at 30 cents on the dollar. In 2026, history will repeat its choreography, only the instruments have changed, because the mechanism is always the same. 1. Debt expands. 2. Confidence peaks. 3. Liquidity vanishes. 4. Assets crash. 5. Power shifts. This isn't capitalism failing, it's capitalism breathing. Each exhale clears the system of illusions. Each crash resets the hierarchy of wealth. And in the ashes of panic, a new order always rises. The few who understand this law don't fear crashes. They wait for them. Because every collapse is not an ending, it's a redistribution. The houses, stocks, and companies sold in desperation don't vanish. They simply change names on paper. History's greatest fortunes were not built in booms, they were harvested from ruins. Now the indicators are flashing again. The Shiller P/E ratio near record highs. Debt to GDP exploding past wartime levels. Derivatives exposure measured in quadrillions. Real wages stagnating while asset prices soar. The illusion is complete, the pattern is mature, and the correction is inevitable. When it arrives, it will not be called a crash. It will be called a reset, because destruction is simply creation in disguise. History doesn't repeat, it evolves, and the next stage has already started. Sectional card. The reflection. Look around. The signs are not hidden. They're everywhere, flashing in plain sight. But the crowd has learned to mistake warning lights for prosperity. The world of 2025 looks nothing like 1929, and yet it feels identical beneath the surface. Cheap money, exuberant markets, governments promising that this time is different. But the rhythm, the deep historical pulse, has not changed. After 15 years of artificial growth, the foundations are trembling again. The same pattern that ended the Roaring '20s, the post-war boom, and the tech mania of the 2000s is repeating, only now it's magnified by data, algorithms, and speed. Central banks once printed paper. Today they print digits. Bubbles that once took years to form now inflate in months. And when they burst, the destruction will move at the speed of light. In 1929, panic spread through newspapers. In 2026, it will spread through phones in seconds. One viral post, one flash, crash, one digital rumor, and global confidence can evaporate before the opening bell. Every empire before us believed the same lie, that control could outpace consequence, that human cleverness could defy mathematical gravity. Now artificial intelligence runs markets built on the same fragile psychology as their creators. And when the illusion breaks, it will not ask permission. We are not watching history. We are standing inside it. Section 2. The present cycle. The data already tells the story, but few are listening. Global debt now exceeds $320 trillion, the highest in recorded history. Interest payments are consuming national budgets. Corporations survive only by rolling over loans. Families live one paycheck away from collapse. Inflation prices rise, wages stagnate, and governments call it transitory. But inflation is not a glitch. It's the signal that the system is cannibalizing itself. Technology. The same AI that promises efficiency also threatens labor privacy and stability. Automation replaces workers faster than economies can adapt. The wealth gap widens as capital owners deploy algorithms to compound returns while wages decay. Geopolitics. The map itself is fracturing. Wars in Europe, tensions in Asia, sanctions, trade wars, all symptoms of a world shifting from cooperation to competition. Every empire at the end of its cycle faces this external pressure rising as internal confidence fades. Meanwhile, the institutions built to maintain order are beginning to break under their own contradictions. Banks, once too big to fail, are quietly consolidating again. Nations once proud of their sovereignty now depend on printed money to stay afloat. And citizens, drowning in data but starving for meaning, are turning away from trust toward tribalism. The signs of the next phase are unmistakable. Credit is tightening. Defaults are rising. Real estate is cracking in major cities. Even the tech titans are hoarding cash. And still, the crowd celebrates record stock prices, believing that algorithms can outsmart gravity. But history never needed gravity. It has psychology, and that's heavier. The same cycle that destroyed the markets of 1929, the economies of 1973, and the illusions of 2008 is unfolding now, quietly, elegantly, inevitably. And when the rhythm completes, it will not be called a crash. It will be called the Great Reset. Because in the end, this was never about economics. It was about belief. And belief is the most fragile currency of all. The silence. Before the reset. History never ends with noise. It ends with silence, a long, heavy pause before the next beginning. When the crash comes, there will be no trumpet, no warning. Just a strange stillness, the kind that falls before a storm. Screens will flicker. Charts will freeze. And in that quiet second, the illusion of control will vanish. The same voices that once promised endless growth will fall silent. Governments will call emergency meetings. Markets will close temporarily. But the truth is simple. The correction has already begun, not in the numbers, but in the trust that held them together. The world will search for villains, bankers, politicians, billionaires, algorithms. But history will whisper the truth. The collapse was not caused by any one of them. It was caused by us, by our collective belief that we could defy consequence forever. For years, we traded reality for comfort, truth for optimism, discipline for dopamine. Now the debt is due not just financial, but moral. And consequence always collects. The judgment of the cycle. Every empire faces this moment, the reckoning that separates the story we tell from the truth we live. Rome faced it in its overextended legions. Britain faced it in the cost of its colonies. America faces it now in its digital empires, its debt-fueled dreams, its quiet disbelief that decline is even possible. The cycle doesn't punish at random. It measures, it weighs, it remembers. It waits until arrogance peaks, then restores balance. In 2026, that balance will come due, not as apocalypse, but as arithmetic. Not as chaos, but as correction. The charts will show collapse. But beneath the panic, something sacred will happen, a cleansing. The illusions will burn away. Prices will fall to meet reality. And the world will remember what value really means. Some will call it destruction. The few who understand will call it rebirth. They will walk through their ruins not with fear, but with clarity. They will see empty skyscrapers, devalued currencies, and collapsing markets, and they will smile because they recognize the rhythm. It has always been this way. Destruction is simply how creation breathes. The third, the dawn. After the fall, from the ruins of every collapse, something new emerges, leaner, wiser, more disciplined. After Rome fell, Europe rebuilt law and architecture from its ashes. After 1929, America forged the middle class and the industrial century. After 2008, a new digital economy rose from the wreckage. And after 2026, another era will begin, one defined not by speculation, but by sobriety. The reckless will vanish, the prepared will inherit. The wealth that evaporates in panic will reappear quietly in the hands of those who studied the pattern and waited. This is the law of cycles, the invisible hand of history that resets the game again and again. Empires never fall from invasion. They collapse from within under the weight of their own illusions. And when they do, power doesn't die. It moves. The question isn't whether the collapse is coming. It's whether you'll be crushed beneath it or stand upon it. When the dust settles, the lights return, and the world begins its next chapter, one truth will remain. Crashes don't destroy wealth, they reveal who truly understands it. The 2026 reset will not end the world. It will simply end the illusion we mistook for permanence. And those who saw it coming will build the next civilization from its ashes, patient, silent, and ready.